One of the things that we've tried to do is have a seamless integration from session to session, so there is no break in the middle, and we move directly into our next panel discussion, which is the future of digital SME lending with DCSF. I'll invite my panelists and our esteemed moderators to the stage. May I request Tughral Amir Turab Ali, who's the Executive Vice President and Head of UBL Pay at UBL. Mr. Shahzad Ishaq, who's the Chief Digital Officer at MCB Bank. Ms. Gabriela Simion will be joining us online. She is the General Manager and Head of Lending at Revolut. May I request Ms. Noreen Hayat, who's the CEO of Zood Pay and Zood Mall, Pakistan. May I request Mr. Taimoor Ali, Group Head, DFS Projects, Karandaaz, Pakistan. May I also request Moazzam Ahmed, who's the former Senior Country Officer of IFC, World Bank Organization, to join me on stage. And of course, our two moderators, Mr. Mir Nejib Rahman, who's the advisor to the Pakistan Bankers Association, and also Ms. Ariba Shahid from Thomson Reuters. If I could please request the panel to take their seats. We have about 40 minutes, and we also have one panelist from joining us online. So we'll take things. We will take things away. Nejib Saab, the panel is over to you now.
Thank you so much. Welcome, Ji. Assalamu alaikum and a very good afternoon to everyone. This is the final segment of today's session. So I'm sure everyone is looking forward to moving on very quickly and ending this. But this will be the most exciting one of the segments. So whoever is missing it, will miss out on some of the very key topics that we'll be discussing today. So we do have a very exciting lineup of guests and panelists today. They all come with, decades of experience, and I think put together there's 100 years of experience right in front of you. So I will start with short introductions, and if anyone is interested to look into their background, you're more than welcome to go onto their LinkedIn profile and see their illustrious career. And I must tell you, it is very illustrious. A lot of, years under the belt, a lot of experience, a lot of knowledge and learning, which I think we'll all learn from today. So let me first start with, is our online?
She will just be joining.
Okay, all right.
She's been sent the link.
Okay. All right, so as you know, we have one international guest. So until she joins us, I'll start, from here. I'll start with Mr. Moazzam Ahmed. He's the former Senior Country Officer for IFC in Pakistan, and currently he serves as a CEO for and a co-founder for Cash Now, a pioneering supply chain finance platform. Next, Mr. Taimoor Ali. He's the Group Head for Karandaaz, for Digital Financial Services Projects. And as you all know, Karandaaz is in the business of promoting financial inclusion and finance the MSME space, and really serves as an implementation partner for the FCDO and the Bill and Melinda Gates Foundation. So, I think most people are familiar with Karandaaz and what they have achieved in this landscape over the last many years. Then we have Mr. Shahzad Ishaq. He's the Chief Digital Officer for MCB. I think it's now exactly 77 years. I think MCB celebrated its birthday, 77 years. So, mashallah, one of the oldest banks operating in Pakistan. And finally, Tughral Turab Ali. He's the Executive Vice President and Head of UBL Pay at United Bank Limited, which is also one of the largest commercial banks. I'm not sure, are they online yet or no? Not yet, okay. I'll introduce Gabriela until she joins us. So she's the general manager and head of lending for Revolut, and she'll be joining us from Romania. And so she'll share about Revolut's journey and what they have accomplished over the last many years, and being one of the top global neobanks in the world. So we'll come to that. So let me just first start with maybe the Pakistan landscape and get some insights and perspective from Moazzam, because you've spent almost 17, 18 years. And I'm talking through the IFC lens because you've been a senior country officer for IFC. And in their report, I think a couple of years ago, it was published that the potential for the supply chain finance in Pakistan is close to $18 to $20 billion. If you look at the current portfolio, it's around, of the banks, of the commercial banks, it's I think about close to $2 billion equivalent, 575 billion rupees. So where do you think why do you think there's first of all such a huge gap in the potential and what we have been able to achieve in 70 odd years? And what, model do you think can be successful, since you're also operating your Cash Now platform? What model would be more suitable, in the Pakistan market based on your experience?
So I think, thank you very much, Nejib. Good to be here. Having a session at 4 p.m. with so many people still sitting out there is a credit to Hamza and his team, so I must give you credit on that one. Look, IFC has been involved in supply chain finance for the last 14, 15 years. IFC has invested in a number of platforms like ours, Demica being one of the most famous ones, which does about $100 billion worth of business annually. IFC does supply chain finance on its own books also. And they're very keen to bring this product across the globe, primarily because it's a very structured product. It allows for lending to be dispensed to SMEs, which are, according to the last number, was $4 trillion gap in SME lending globally. So supply chain finance is a very easy segue into addressing the SME finance gap. A lot of times people, or IFC's view is that for bankers to address the risk profile, a structured product will always work out well. And hence, just to put perspective, IFC has been able to implement supply chain finance programs across the globe with a lot of success. Just in Vietnam, in 10 years, they were able to do about $7 trillion worth of supply chain finance transactions, domestically and internationally. So that can tell you the magnitude that you are working with. And I think the other part from the IFC study in Pakistan in particular is very eye-opening of the potential that it shows up. And this potential of about 18 to 20 billion is only in the manufacturing space. If you go through the study, and the lending, SME lending in Pakistan, though $2 billion, but in the supply chain finance space, it's about $300 million. So the gap is enormous. And supply chain finance, also remember, in Pakistan has failed multiple times because banks have tried doing it because it was paper-based, it was cumbersome, it did not get the traction that it should get. But now with the digital world, I think we should be able to get moving in that space quite rapidly. So the opportunity in Pakistan, as you rightly pointed out, 18 to 20 billion is a very large number. Banks should be able to cater to that, and I think one word that resonated in this whole event was collaboration. You collaborate with the partners. And rightly, as Salman rightly mentioned, that, like Cash Now platforms like ours, we are financier agnostic. We'll partner with any bank. because all they are looking for is someone to be able to give them the third-party authentic data that verifies an invoice being correct, or there's a payment date to it. So I think coming back to the IFC study, and I think there was an Asian Development Bank study also, they all show a very serious potential for supply chain finance in Pakistan. I think the State Bank has taken a very productive role in pushing banks to do that. I think banks have to understand that there's collaboration. They have to also understand it's a patient game. It took IFC in Pakistan 4 years to get their supply chain program up and running, just with 10 clients. And you had so much work to be done. So with fintechs working with banks, it becomes a collaborative effort. One more comment that I'd like to make. Globally, according to the McKinsey study, we've got over 50% of fintechs work with banks to create a success of supply chain finance. So it's all a collaborative effort. Thank you.
Thank you, Moazzam. I think we have... she's available? Okay. So let me just, I think I've already introduced Gabi, but I'll still do a quick introduction. So Gabriela Simion, she's the head of, he's a general manager and head of lending for Revolut, and she's joining us from Romania. So Gabi, can you hear us?
Yes, I can.
Okay.
Hello, everyone.
Thank you for joining and taking out the time. Let me just come to you because we are kind of getting a global perspective, before we jumped into Pakistan. Just to understand, we all know that Revolut has shown some, exponential growth over the last, 7-8 years, and it has a, quite a formidable presence, as one of the leading neobanks or digital banks in the world. So can you just tell us about your business value proposition for our audience here? Thank you.
Okay. Yeah, first of all, thanks everyone. Thank you for the invitation. It's an honor to be here and to see good old friends, not only leading the panel, but also in the panel. I've seen that Shahzad, who is a very old friend, is there. And I have special hi to him. So yes, just for everyone who is not very familiar with Revolut, we are a global fintech, or as we like to call it, a technology company with a banking license. Our strategy and our vision from the beginning is to change the way that people are managing their finances. And we just had the 9-year anniversary. And actually, in the last 9 years, we managed to acquire over 45 million customers across 38 countries, and to actually generate, according to our 2023 financial statement, 2.2 billion USD in revenues, and over $500 million in profit before tax. So this is quite an achievement. And actually, we are continuing to disrupt the way that people are managing their finances across the globe. While our biggest customer base is obviously on the retail side, there is a big focus that we have on the business side. And actually, our strategy is to become the primary bank and the one-stop shop for all the businesses up to 100 million USD all over the world. So we are bringing, so what we are building basically, it's an ecosystem that brings together all the financial world, which actually exceeds a little bit the banking area, like the traditional banking, as we know, like loans, deposit, payments and cards. So we are trying to understand what are the needs of businesses of various sizes and the way that we can cater them. Right now, our main value proposition revolves around what we are the best at, and this is like global payments, global transfers, cards, virtual cards, the fact that like businesses can very easily manage their payments being locally international in one place. Also, we offer key functionalities that are extremely important, and we believe that they add a lot of value of having them in the same, like on the phone, like expense management, accounts payable, being able to track, how you customize your level of access and permissions. And also very important, we do offer API integrations that allows businesses to integrate with various accounting softwares that they are using. So and while like this is a journey, so right now we are we are catering to these needs, and the next step obviously, I mean, if we want to become a primary bank for this type of businesses, is to go into the lending area.
Okay, thank you, Gabby. I'll come back to you when we maybe go enter the scalability part of the discussion. But let me just move to Taimoor, who's representing Karandaaz here. So Karandaaz's mission is, of course, to uplift the MSME sector as one of the verticals. And can you tell us how Karandaaz is engaged in this sector, and how do you see the digital innovation part supporting the supply chain finance?
Thank you very much for the invitation and letting me speak about this topic, which is very dear to Karandaaz. Supply chain financing eventually results into adoption of digital payments and financial inclusion on the consumer side. So we kind of bifurcated the value chain or the supply chain into two parts, the upstream part of it and the downstream part of it. The upstream is where the FMCGs and SMEs transact together. SMEs could be the suppliers or the distributors, and the demand side is where the consumer or the distributor or the retailer interacts. The demand, the financing demands of the two sides of the value chain are very different, and digitization enables the two parts very differently. So Karandaaz exists for kind of addressing any gaps in the financial ecosystem, whether it be regulatory or infrastructural. And to this particular supply chain financing, I would call it value chain of retail. All through the value chain, there are interventions that we are making, right from the downstream, where the P2M transaction at Rast is contributed by Karandaaz. The theory of change is that if the consumer paid digitally, the retailers are able to pay digitally to their distributors. When they are able to pay digitally to their distributors, they get eligible to get digital financing, get better credit scores. So this P2M enablement is on the downstream part. Then we had seen, and we had also, we have discussed in this meeting that there has been a gap that was left or is left by the banks. So there was a special purpose vehicle created as an NBFC with the name Parvaz Financial Services, which is very much focused on SME financing and particularly digital financing as well on the SME side. On the upstream side, Karandaaz is, it's a little complicated. Things start getting complicated when you go, upstream. So currently we are working with the Federal Board of Revenue, which is the FBR Pakistan, by creating a digital strategy for them. We had discussed in the beginning of this conference the importance of the platforms like Trades in India and e-Fatura, e-invoicing platform in Turkey. So unless you have a verification authority of invoices and availability of digital data of those invoices, you are unable to get into invoice factoring on the upstream side. So there's this digital strategy along with policy being created with FPR through Karandaaz, where we are going to enable e-invoicing in Pakistan in future. In a position and shape, this is already there. Very recently, a platform has been, given a license to start operating as a invoice aggregator, but I think e-invoicing has to offer a lot more than that. there has to be a lot more, technical players that are going to enable invoicing in Pakistan. So this value chain needs to be bifurcated. There are different business models that can be created. Fintechs, banks, all types of entities can take part in it, and Karandaaz is viewing it as two very different sides of a value chain, and there are interventions that need to be created very differently in both the sides of the value chain.
Thank you for that insight. And since we are talking about innovation, so let me just pivot to Tughral, because UBL is also at the forefront of innovation and introducing various digital platforms in this particular segment also, apart from others. So building on what just Taimoor said, obviously UBL, of course, with millions of customer accounts, there's been a lot of focus on merchant accounts. Can you just walk us through your experience in terms of onboarding merchant accounts and offering them maybe some lending products? How is that particular segment operating, and what have been some success stories that you would like to share, or maybe even some challenges?
Sure. Thank you very much. So I'll very quickly introduce UBL Pay and what we're offering the market right now. UBL Pay essentially is a combination of two business lines. One is digital acquiring, so merchant acquiring, and the other is our branchless banking business, which was known by the name of Omni. And so we've kind of merged these two, and we've brought banking as a service into the industry, and we're looking at partners, and we're saying, work with us. Let us be your trust bank, your settlement bank, but we want to enable you, be it fintechs, other partners, to go and do what they're good at, which is figuring out how to solve these challenges on the ground in terms of SME and merchant onboarding. So I've got two verticals that we are focusing on. One is the merchant acquiring part, and the other is where we are sort of pivoting that branchless banking team towards an SME play. And what we are starting to figure out are that, so the potential is huge. There's a big number sitting out there. And some of the challenges that I think that we need to solve as an industry, one is visibility. So when we say, certain X number of merchants available in the Pakistan ecosystem, this is what Shahzad Saab and I were just discussing, that number seems too small for a country the size of Pakistan. So is there even a fair idea of what the potential size of the market is? The second challenge that we have is, when we go into this space and we are talking about considering lending over here, so UBL's philosophy is to look at lending as part of a relationship that we have with the merchant. And so here's where we enter into the chicken and egg situation, which is when you're getting into that relationship with the merchant, you need to bring something to the merchant so that he gets into the relationship with you. But to bring something to the merchant as an offering, you need to know the merchant well enough. So here's where we need to solve this, this challenge, where do we have the right sort of value proposition to pitch to this merchant? Lending is a big one. But for the bank, then it needs to take a step back and say, how do I mitigate my risk over here? If I'm fronting the capital, who's fronting the risk? Are we ready to park that risk with us? Or should we find third-party partnerships in the market that can do this for us? And then, of course, there's the regulatory question mark that we also have to solve, which is if we want to onboard these merchants in mass, then we need to figure out how digital onboarding can be enabled. And can we come to smart accounts for merchants, which should be treated as full KYC accounts and not just wallets? Or is there a journey where we enter through wallets and graduate towards full KYC accounts? These are some of the things that we are working on today, and we are trying to solve these challenges. But I do think that in terms of, if we use the acquiring framework, I think there's a pyramid approach that we can take, where the Rast QR, which we are about to go live with, inshallah, that becomes the entry point for a small merchant. But the idea then should be to graduate. We've also launched soft POS, graduate towards soft POS, and then you are coming towards a full POS solution and IPG, etc. But these are where, you know, the risk profile of the merchant is also changing, and you need to then maybe go through a staged KYC approach. So these are some of the things we are trying to solve. The last point I just want to add around data is that credit scoring has been around for a little while. The potential for credit scoring to solve the lending issue, especially digitally, is there. But we also need to keep in mind that data, our behavioral data, only exists in a context. And when that context changes, the behavior also changes. So when you're lending based on ancient data or historical data, I should say, historical data, that behavior is what you've observed in a certain context in a certain industry. When you were lending to a merchant and the interest rate was at 6%, is the behavior going to be the same when the interest rate is 20%? What happens when taxation comes in? What happens when other metrics in the macroeconomy change? So we have to treat data, but treat it with a certain degree of skepticism that data will only tell you the quality of the question that you've asked. And so if you're asking a dumb question, the data is just going to give you a very beautiful, dumb answer. So we just need to be aware of that.
No, I appreciate that, but just a quick follow-up before I move to Shahzad. Because obviously now, as of effective July 1st, there's a big drive on the tax, inclusion of the merchant and the retailers, basically. And has there been any pushback on, onboarding them in your recent experience? Because it's been, a few weeks since it came into play.
Well, look, so the opinion I give you is an unqualified one at this point because I don't have research to back it up. But yes, our sales teams would say that, especially when you're going to this new segment, this merchant who maybe isn't even appearing on your radar right now. One of the big concerns is what's going to happen when I become visible to the authorities in terms of my income being taxed, the sort of documentations then I'll need to start providing. So there are question marks around there. And I think we should really think of this in the longer term. And this segment is the one where we should go in with a zero tax approach. Bring merchants on board because the value proposition we want to create for them is connectivity to a larger ecosystem, financing becomes possible, but don't tax them at this stage. Delay that till this merchant is part of your ecosystem, has benefited from it, and wants to stay part of this ecosystem.
Yeah, give them the opportunity to. Gives them the opportunity to at least, start the process, and then later on, as they get their, feet, solid in the ground, they can at least, and as the revenue starts rolling in. I understand that. So Shahzad, obviously, MCB is also, playing a huge role, obviously being one of the largest banks in the country. And you are also big in working capital finance, with the supply chain side, as well. So can you just walk us through what, MCB has been up to in terms of the, migrating it to the digital part of the equation, and if it's in progress. Thank you.
So, Nejib, thank you for having me, and Hamza Saab, thank you for getting me in. It's a pleasure to see Gabriela. We rubbed shoulders back in 2012, I guess, when we worked for Citibank in Romania. So, who says elephants can't dance? So, I heard earlier that, digital banks will have a role to play. So I also want to tell you that we are also changing at a kind of fast pace, and some of these things we've been already doing. So what have we been doing? Invoice discounting, factoring. Invoice discounting is when you have an anchor and the value chain, in this case textiles or sugar mills or a value chain of rice. We also know that agriculture has been termed as one of the best performing economic sectors in the Economic Survey of Pakistan. So that helps us. We've been doing it on paper, manually. It's a great call to action by central banks, so MCB has also responded to it. We are already working on solutions on how we'll take it further. Salman Akhtar Saab was here from Adalfai, and Monas is sitting here. So we're talking to some of the key players in the market. It will all be about ecosystem. I'm a great believer that fintechs, and I've said this earlier as well, and financial institutions, or be it digital banks, we'll all have to come together to play a role. So MCB specifically, the entry point for us is invoice discounting for some of the anchor businesses that we mentioned. I also hesitate to say that there is lack of receptiveness. There's some anchors who are very willing to play the game, give us their information, their key vendors, suppliers, and the vendor suppliers, on the other hand, seem to be receptive. So we'll get it going from there. And yes, I agree, not everything will be invented inside. So we'll work with market players out there who are willing to platform with us. And but the larger ecosystem also has to come to play. Earlier in the day, I heard some of the bank CEOs talking things like the role of government, the role of the judicial services, banking courts, and all other services, because you have to see this digitization of supply chain financing in that greater context. Ladies and gentlemen, I'll echo back what you heard earlier in the day. The whole ecological system has to come to play. The leading financial institutions will play our role. We'll step into it. We'll respond to the call, and some great call to action by a central bank. But the whole ecosystem will have to come together to. I also saw some data that Pakistan only has 12% of GDP as commercial lending, and somebody else said, I think Atif said it, 6% of it is commercial financing, which is very low. And for countries like Bangladesh, Sri Lanka can easily the commercial lending as percent of GDP can be in north of late 30s or 40s, and for countries like US, it's plus 100% of GDP. So those are staggering numbers. We've got a lot of ground to cover, huge opportunity, and I think Tughral would also agree that there is a willingness and there is a receptiveness to play the game. So get into the game. I think we'll have to learn the game theory a little more, and we'll have to get into it, see how the value chains respond to it. So we are all set to go out and do our bit.
Great, thank you. Moazzam, let me just kind of ask you, because obviously in supply chain finance, you have the big boys, the big players, and I think everyone is going after the big game. That said, but there aren't that many, right? So, I mean, the bulk is the micro and the small. So, what is the, I mean, the process or the building blocks that we, pick up the entire sector and not just the big names?
I wish I had a better answer, but we are at point zero in my view, and I think to get the banks to get comfortable, if you go to a different segment, it'll be challenging. So you have to start up with the top companies and get them to get comfortable with a structured product that does not require any collateral. Because, one of the things that, was just mentioned out here, Shahzad just mentioned, an agreement with the anchor. It doesn't happen anywhere else in the world, right? You just take an approved invoice and finance it. Invoice is your collateral. So I think going down the totem pole, we are about 5 years away from that. But from an opportunity perspective, I think if you start off the banks with the top clients, who they are comfortable with on the cash flow risk perspective, they will start moving down the totem pole. Because once they get hooked to getting money, because right now a corporate customer does not make them any money. when they go down and take the same corporate risk or cash flow risk from that customer, but give it to an SME, their margins start increasing. It's all about the money. And I'm sorry, it's all about the money at the end of the day. New products that are going to be coming into play, the State Bank Governor, Deputy Governor just mentioned, first loss product that the EC has approved. Taimoor just talked about the e-invoicing. We've started e-invoicing with one of the large corporates, 2,000 invoices being generated on a monthly basis. So that tokenization that is going to happen. I mean, you mentioned Turkey. Turkey did it in 2014. India did it in 2022. The invoice, the life starts with an invoice. As long as Salman said, as long as you can authenticate that product, you're done with it. So you have insurance products. So these gaps will not be done at the bottom level. It will have to cascade down from top to bottom. Banks have to change their attitudes, and they're willing to work in it. But the apprehensiveness is it's a lot of work. SME lending, I would rather lend to, I'm sorry, the government of Pakistan. It's easy. But that's what the reality is, and that's what we are dealing with. So I think it will take time. And we need to all understand we need to have patience. And I think, Dukaan is working on the distributor side. That's even a riskier product. But data is where it will help banks get comfortable. So,
just as a quick follow-up, since you deal with obviously in this space with the banks also, and also maybe the lower end of the SMEs, what are your insights that you've developed in terms of the skill base of the bank people or the bank employees who are dealing with supply chain finance, and also at the customer level? I mean, do they understand what products are there in the market? What is it, that they need to do? Because sometimes we feel that, that is also perhaps a gap in a market where the correct skills of the, financial institutions, maybe at the, higher level, but I'm just generalizing. Is that at play as well? Is there a gap in our market?
So my smile should say something on that account. I think banks are manageable. If you give them a structured process, they're very good at understanding I think the biggest challenge is getting that SME to get on board. I'll give you a small example. We just onboarded a small customer, 10 million rupees worth of transactions every month with a large corporate. It took about 4 months for that company to get onboarded by the bank. Nothing to do with the bank, because they didn't have any audited numbers. They didn't have information. So we kept on helping each. It's a very, very tedious process. But once you get them on board, it becomes a smooth process. So I think getting banks, you can manage them. I mean, you can go down the totem pole. They have a risk team, which is a lot more difficult to manage because you're asking them to change the profile. No master agreement, no fixed collateral out there. So that's a mindset. That is still manageable. But the SME, the real SME that you want to hit, there it will take time because you need to educate them. You need to do a lot more hand-holding that the bank is willing to give. So that's why fintechs like us work out very well for them. We keep a tab, day 1, day 2, what's happening, how can we help? So that is where our value prop comes in a lot more. But you've nailed it. It's getting the SME onboarded is a difficult task because they do not have the information or lack the data.
I don't know if Gabby is online or not. Gabby, are you there? Oh, okay. All right. So let me just move to Taimoor. You talked about the upstream and downstream, part of the supply chain financing, which are the crucial tools. But perhaps, provide, perspective from Karandaaz's perspective that how do you make it more seamless and efficient? I mean, obviously there are a lot of it's not as simple as it seems.
Yeah. So, I start with the downstream, and you see onboarding a retailer, onboarding somebody who's directly, working with the consumer, interacting with the consumer, and risk profiling. Tughral, like you mentioned, that somebody has to take the risk. Mass market brands, mass market operators might not be able to map consumers, which are retailers in this case, unless it is their consumers, which means wallet operators working with retailers as their consumers, they have the financial data, they can do the risk profiling, but there's so much that they can do. The market is a lot bigger than that. The MSME is around, I heard 6 million in the morning. We worked on 5.2 million number, but anyway, it is more than 5 million. It's a big number. So coming back to the point, I think it's important for the fintechs to take up that role gap in the digital acquiring of the retailers. I think that is very important. There are platforms like Cash Now. We also saw DigiKhata here, which are kind of transforming that bit. Now, Karandaaz believes that it is the financing opportunity for the operators which is going to off-burden the price on MDR for the retailer. This is all downstream stuff, which means that if the fintechs are able to gather the right data, collaborate with the right operators in order to kind of analyze and score the right data, they are going to offload the risks from the balance sheet partners. And once they are going to offload or at least make the risk visible to the balance sheet partners, only then they are able to crack those partnerships. Let's take some names. Some fintech partnering with a bank or an NBFC in order to create a proposition for the retailer. Dukaan is doing that. Cash Now is doing that. Investmate is doing that. There's so many others as well, Hubble. And this is where the digital transformation is going to really help the ecosystem in getting those partnerships effective. We also believe that the price on the MDR for P2M has to come down. Currently, it is left to the market because the ecosystem is not established. Once the ecosystem is established, the earning has to come from the lending. The transactional payment-based revenue streams needs to be cut down. This is where the adoption will come from the consumers and the retailers. Only it is when they are going to collect digital payments from the consumer, they are going to pay back loans embedded in the systems on an auto debit system in order to have a better profile, a risk profile where they are eligible for more book. I'll take the discussion from downstream to upstream, and when I talk about upstream, where I believe your business is trying to impact, and it's absolutely a difficult place to operate. I can relate to that. Creating an e-invoicing system on your own is primarily not your job, but you're doing it, and it's very difficult to sustain in this market. So that is where the innovation has to happen, where the availability of data and the digital form of it is very important. So merely scanning an invoice is not digitization of it. Enabling digital data points on digitally verifying an invoice is something that is going to enable the segment on which the risk profiles can be built. And this is the alternative data to financial data that the banks can leverage in order to score the value chain partners or the value chain nodes. So this innovation, now all this conversation has nothing to do with government policy. While I do realize there are certain policy decisions that needs to be taken, our own research says that retailers are comfortable doing digital business, digital transactions. They might not get carried away with getting into tax net when it comes to small consumer payments. So I think we need to get away from that myth. Our research, for a matter of fact, knows that most of the retailers use either EasyPass or JazzCash accounts. There is a reason that they are using it. They are not a deterrent. And they are using it, doing digital informal transaction to their distributors. And now they have formalized it under the M4D transaction type. So the innovation has to come from private sector, fintechs and banks partnerships. And the last point that I would want to emphasize over here is the role of Karandaaz and the philanthropic capital, where Karandaaz can be leveraged by the private sector in order to do some of those assessments and needs that needs to be filled. So for instance, if a bank is uncomfortable with the risk profile of a retailer because they don't have a financial data, this philanthropic capital can be used in partnering with Karandaaz to unfold the right delinquencies which are there in the system with the limitation of financial data, which means if we have the ordering data of a retailer and we need to build our credit scoring models, I am willing to chip in my money for risk provisioning. If there is any default, I'll take the first loss, just for you to go and experiment and unfold the real delinquencies of the model. So this is an offer on the table, and this is why we exist. This is why we want to really work with private sector in order to, kind of disrupt the value chain.
No, this is great, but I mean, are banks coming to you? Do they know
Yes,
that this option exists?
So banks, FMCGs are really excited about that because it is their sales that is eventually going to get positively impacted when there's liquidity injection in the value chain. So we do see things changing, mindsets changing, but of course it takes a lot of experimentation. It takes experimentation to the nth level where the company stops surviving, but I believe that we need to run faster. And we as the Center of Excellence for the financial ecosystem would want to play our bit in enabling or taking down some of the risks. Right. For the banks to, kind of unfold the information that is currently oblivious to them.
Hey, thank you. This is very insightful. Tughral, earlier we were talking about your millions of customers, especially whether it's MCB or HBL, the big five, big six. One thing I see some of the banks lacking is in the cross-selling. So how are you taking advantage of the the digital platform and the analytics part? And because of course, I mean, everyone is interested in new to bank customers, but the existing to bank customers, they get ignored sometimes. So I'm sure there's wealth of data and customers who are SME maybe customers, or who are basic merchants, whatever. So how are you doing on that front, on the cross-selling part?
The last couple of years we've spent a lot of time building up a significant base of SMEs. And this includes the really small guys, the sole proprietors as well, who are sitting out there. And we've done this. It's feet on the street. It's one account at a time. It's direct selling. It's been done by my team spread across Pakistan. And like you're saying, now that we've built up this entire base, we've started sifting through the data and started getting a sizable chunk out of this, which we feel is primed for cross-selling. And so what we're looking now at is the entire asset base of the bank and figuring out what is it that we could be pitching to this, this little guy sitting out there somewhere in one of the smaller markets. And of course, it doesn't mean that you pick up a consumer product as it is and then you just shrink it down and you hand it over. We take the concept of the product and then we, like for example, let's say it's a credit card. You take the concept of the credit card and then you try to fit it into the context of this little guy. So that it's a product that can be delivered at mass scale, because we are talking about tens of thousands of accounts over here. It can be delivered at mass scale, but also at the same time protects the interests of the bank. And we want to make sure that there is no point at which we sort of run into problems with regulators or compliance, etc. So this is an area that we are very actively exploring today, and I think it's one of the KPIs I've given my team for next year, that we need to have some products identified which we can now start cross-selling in this very segment.
No, good to know, because there's wealth of data and wealth of information which sometimes gets totally neglected. So which is good to know. And just coming to the last question, because I think we are just run over our time. So Shahzad, obviously we've talked about scale. We've talked about cross-selling within this context. How do you at MCB see that? I mean, what are the key components? Do you feel that how do we scale up the this part of the business?
Thank you for asking this, Nejib. I think it's a very important topic to address, and The key thing is capacity building, and I think Taimoor has and Moazzam Saab have touched about it a little bit. The market needs to be educated more, outreach through interventions by entities like Karandaaz and financial institutions working together, government working together. There have been interventions here or there. There was a national financial inclusion strategy under which there were some interventions to build SME. Earlier in the day, we also heard about SMEDA being rather ineffective, Small and Medium Enterprises Development Authority, on the model of what you have in US Small Business Council and stuff. So the market forces all need to come together, because I would sort of hesitate to say that financial institutions and large ones are solely responsible. We humans follow a path of least resistance. So we know what we know, but to make things work, it has to be economically viable, and it has to be workable for all parties involved. So it's a lot of collaboration that needs to be done. I'm also a great believer that innovation, Mudassir talked about it, business model innovation is key, and that actually sadly takes place more at fintech's level than would ever take place at large financial institutions. Therefore, the partnership model. So the whole ecosystem will have to come together. That's how I view it.
Okay, good. Oh, she's back. Okay, so I can ask Gabby the last question. Sorry, Gabby, we lost you in between.
I'm back.
Okay, so we were just talking about scalability, and I'm just going to ask you the last question. That, it is one of the challenges, I think, not only in Pakistan, but I think globally also. So what is your perspective, in terms of how Revolut has built and scaled its lending business?
While I was trying to reconnect, I was following the discussion on my mobile, and I've seen that, the panelists were touching upon and they are like very valid topics across the world, like the onboarding for both retail and business customers, and as well as, like financial education. Obviously, our success, and this is a question that we are getting, most of the times, is how did we manage to acquire so many customers? And I think that this combines my perspective on both topics, is that we made it simple for the customers, because there may be some geographies where people are very financially educated, but where I come from, we are facing the same challenges that you are facing in Pakistan, meaning that the financial literacy is not at its peak. So we are still struggling with the financial inclusion. And there are a lot of efforts that the government payments organization, banks are doing for over 20 years to improve the financial education. But still, it seems that it's not going so well. The reason is, and I think that, maybe this is not valid for Pakistan, but definitely valid for Romania, it's that, as bankers, and, I spent my last 25 years in banking, we sometimes tend to do the financial education tends to be a little arrogant, if I may say, So how Revolut solved this problem is that actually we demystified, the financial services, and we put them at the disposal of the customer in a simple, easy, and very, easy to understand, irrespective of your level of financial education, So we didn't use banking jargon, So you can be compliant, because obviously this is the most important thing, but you have to speak to people in their own, language, a language they can understand, and in a way that they don't need you every step of the way in order to be able to consume your products and services. I think that this is where the big difference happened, So simplicity is the ultimate sophistication. And sometimes we forget that actually to make it simple, so there are two parts. It's the whatever financial provider and the customer. And somewhere it has to be, like complicated. So we took this complication in order to make it simple for the customer. Obviously, this requires more work, more, better evaluation and deep analysis. Typically, all the decisions that we make, they tend to be data-driven, so we don't take qualitative. And despite, there may be a lot of experience that we are bringing on the table, we are always trying to cater to a specific need of the customer and to, make sure that that's catered in a way that in a simpler way that has been done before by any financial provider. So I think that simplicity and frictionless are, the keywords that are, will be able to improve the financial education of the piece. So probably it's not necessarily on what you are offering as a financial provider, but more on how you are doing this. I think that this is like how, this is the key, like the magic word that will make the difference.
No, I think it's very insightful, and I think in this market also we are trying to achieve that, be as frictionless and as seamless as possible. But we still have a long way to go, especially in the various segments, that we operate. And but it's been a great, learning from Revolut's perspective also. And I take this opportunity to thank each and every one of our panelists and yourself, Gabby. And before we wrap up, I don't know if we have time for maybe one or two questions from the audience, if anyone wants to have a go. I guess. Oh, okay.
I would like to hear everybody's perspective on, we've been hearing throughout the day about the resistance of retailers coming onto a digital platform because they'll have to join the tax net, and I think each of you covered it to an extent, but I'd just like to get clarity. What are your opinions? Is that a real obstacle? Is it a myth? I think as we spoke about, I have opinions on it, but I'd love to get the expert views of the panel.
Mona, since I spoke about it very openly and wanted to bust the myth, so yeah, my or our stance is that there are multiple tiers of cities here in Pakistan and multiple tiers of merchants here in Pakistan. There are large-scale merchants which have thin margins. There are small-scale merchants which have bigger margins. So it totally depends on the sort of business they're into. MSME is more than 5 million. Yeah. Experiment not even done on 300,000. I think we have a long way to judge before we say that there is a clear-cut problem on getting into the tax net. Maybe your company can.
Thing you are talking about is limited to small merchants, because if you construct a house, I recently did, so whenever I go to a tile manufacturer or tile shop, sentry shop, etc., these are the large ticket items, and they are very hesitant even to get transfer through into their accounts as well. They just want cash, and that is the only way they want. Keep aside the digital payment or card payment.
Yeah.
So is it your observation, what you're talking about is primarily towards small merchants, or you have researched some data on large merchants as well?
So it's primarily logic-based analysis where small merchants having thin margins or small merchants having larger margins. So categories can exist. So for instance, if you go to a merchant and they are doing 100 million sales a month, fridge वगैरह बेचते हैं, electronic accessories, and there's so many others, bigger ones, housing accessories. So I mean, they would want to shy away from taxes, so you can't drag them to digital payments. वो तो MDR भी आपको as a consumer shift कर देंगे. But then there are smaller merchants who are doing consumer to merchant transactions through IBFT or a P2P transaction through Rast. So at least the payment is landing into an account, whether it be a consumer account and might not be a business account, but they know that they are comfortable. Let's say payments less than $1 million a month is something that anyway doesn't get into the radar, and there is no need of even mentioning the radar. If you are providing convenience to the merchant, I think that should be the key. So when I said we don't have enough empirical evidence, 300,000 merchants on QR payments, maybe if we include the POS devices as well, maybe 400 merchants. We don't have the data to kind of judge if they really don't want to go there. Had it been the problem, the 400,000 would have not been already enrolled, and micropayment merchants more so.
I would add that as far as we have been talking about incentivizing the digital payments and card payments, we will have to, as a government, incentivize the merchants as well. Like we will have to give them tax credits and tax breaks so that merchants are also inclined towards acceptance of digital and card payments.
जी बिल्कुल आपका पॉइंट ठीक है, and Shahzad sahab did touch upon it by mentioning that there has to be an ecosystem activity which also includes the policy side, policymakers as well. I specifically took the stance that there is so much other than policy that could be done in innovation and disruption through private sector partnerships that is still not tested, not experimented in Pakistan. However, it doesn't take away the impact of policy changes. I am not a policy expert, so I really don't want to speak about that, but certainly policy is going to enable the segment and the ecosystem as well.
So Monis, I just want to add my comment. In words of Viktor Frankl, it's Victor Hugo, sorry, it's an idea whose time has come. So I think it's just that we've got to scale it up. We've got to experiment a lot. From a very, very dated experience, I remember once in my life, in a given 2 years' time, I met 5,000 people and asked them to buy something, and I had a conversion rate of 7%. So I mean, at a certain level of abstraction, you've got to try hard to make a market out. So I think we are out to make that market. So we should just go out and create this market. Let's take it offline.
I think
Tughral,
there is going to be tea right after this, so tea and refreshments.
Tughral, if you can make your last comment.
Okay, very quickly. No, I think the question you asked, Monis, is a brilliant one, and I'd just like to refer back to what Gabby said, and I think that's the answer: simplicity and frictionless. So the more friction we introduce into the process of onboarding these merchants, the tougher job that we are making our own lives more difficult. And I think, there are only a few things, really, if you pick it out. They have concerns, especially merchants who are sitting outside the formal economy, have concerns about becoming a part of the formal economy simply because they don't know what else it will entail. And I think getting them to try this, system and showing a net benefit for them, that's really important. And I think the taxation part is something that could really create an incentive over here. We've already seen a shift when in restaurants we dropped, from 15% to 5%, and we saw how the volume started picking up. So I think we have to take that same approach if the government really thinks a little long-term about this. Bring people in first before we start taxing them. And then the second thing that we've really got to work on is that MDR issue. And I really think that this is where banks need to start thinking about the possibility of a zero MDR future. Because we need to take, especially for Rast QR, we need to start taking the MDR out of the equation. That's not where banks will make money. Where we will make money is when, the value add services start coming on top, which includes lending as one of the propositions. Yeah. And that's really when we do these two things, we take them away, we stop talking about the MDR with the merchant, we stop scaring them with documents and what will happen in the future. And then we show a net benefit, that this is the benefit we'll give you today, not 6 months down the road, not 1 year down the road, but today. That's where really the conversion is going to happen.
Great. All right, so thank you once again, all the panelists, for taking out the time and giving us your incredible insights. I also take this opportunity to thank Hamza and his team for organizing this wonderful event. So thank you, Hamza, and thank you, everyone.
Thank you.
So we have Hamza and Monas to help us give away the mementos. May I request the memento for Tughral Amir Turab, who's the Executive Vice President of Head of UBL Pay at UBL. You know, as a panel, it's really tough, and as a speaker, it's really tough to survive and sustain yourself throughout the course of the day, but equally tough, equally more challenging is the audience that sits through it. And for those of you who are here, hats off to you. So this is where the knowledge share comes in, and this is where the reward comes in. May I request the memento for Mr. Shahzad Ishaq, who's the Chief Digital Officer of MCB Bank. Modis, you have to stay on stage. May I request the memento for Taimoor Ali, who's Group Head DFS Projects at Karandaaz, Pakistan. And while we present this memento, I'd also like to take the opportunity to thank Gabriela, Simion, who's the General Manager and Head of Lending at Revolut. She joined us online, had some technical issues, but we finally made it through. I'd like to present a token of appreciation to Moazzam Ahmed, who's the former Senior Country Officer at the IFC World Bank Organization. Thank you for your insights and for your commentary. And of course, our brilliant moderator, Mr. Nejib Rahman, who's the advisor to the Pakistan Bankers Association. Nejib Saab, I've seldom seen moderators who make it look so easy.
So this would not be a justice if I just present this shield to Mir Nejib Rahman. I must, acknowledge from the bottom of my heart all the help that he extended to me, not only for this conference, but various previous ventures as well. So he is a, thought leader in his own right, an authority, someone who I look up to. And this was only incidental that he, at that time, was also advising Pakistan Bank Association on this very particular topic. So that was a good fortune to us. But otherwise, also on a personal level, he is like an elder brother and always available to us. So with this, I would like to present him this memento. Thank you.
And if I could request all the gentlemen to form a group for a group photograph.
Thank you very much, everyone, for your patience and for being a wonderful audience. With this concluding session, we have now come to a close. Till next time, goodbye and Assalamu Alaikum.